Hello and welcome. You're watching BT I'm Tanya Neja. Well, the primary market is on a roll, and the company on our radar today is Bharat Highways Investment Trust. The IPO will open for subscription on 28th of Feb and will close on 1st of March. The company plans to raise 2,500 odd crore rupees. That is the highest so far in 2024. So to discuss the IPO plans and much more, we have with us the management of the company. We have Mr. Amit Kumar Singh, who is the CEO, and we also have with us Mr. Harshil Sawant, who is the CFO of the company. Gentlemen, very good afternoon, and always good to have you on BT TV. Let me begin by asking you about the company first. It's an infrastructure investment trust. So I want you to explain your business model to our viewers, and how is this different from a mutual fund?
Yeah, so see, if you see in spirit, this is a same asset management business where since it's a trust which will acquire infra assets. In our case, it's more road assets. So we are going to acquire HAM assets, which is hybrid annuity model as introduced by NHAI almost 5-6 years back. So there are 7 completed HAM projects which is being inducted into this InvIT. Basically, InvIT as a business model, InvIT will keep buying assets, and there's a platform. There's a company, GR Infra Projects, and this platform will keep buying these road assets, HAM assets from GR Infra. We also have, other than this first, as a part of the formation transaction, the 7 assets, we also have a ROFO, which is right of first offer with GR, where 23 more assets is already the part of the pipeline, which this InvIT will look to acquire. Again, this InvIT will also look at acquiring third-party assets, which is non-GR assets, non-GR infra assets from the market. And we will keep acquiring road assets. We will keep running them. We will do the operation and maintenance part of it. And as and when the concession will get completed, it will be basically handed back to NHAI. So that's the model. In a mutual fund business, same, it's a AMC, but you keep buying shares of companies, where in our underlying assets, it will not be companies, but it will be, road assets. So that's the primarily difference between this mutual fund and this InvIT. Yeah.
Okay, absolutely got that. And the company also plans to raise 2,500 crore rupees,
Right.
the highest so far in 2024. So how are you going to use the net proceeds from this initial public offering?
Sure. So if you see, Tanya, across these 7 assets, which is as a part of the formation transaction we are going to acquire, across these 7 assets, we have debt on those SPVs book to the tune of almost 3,527 odd crores. Right. So what we are going to do in the first place, barring some 70-80 crores, maybe, some issue related expenses and some 15-20 crores of the general corporate purpose, amount, which is going to, we may hold back at the InvIT level. Balance 2,400 crores will be used to pay down these debt, which is at the SPV level. So is what going to happen is basically this out of 3,527 odd crores, will straightforward pay 2,400 odd crores. And that will leave us at the debt of around 1,127 odd crores, which will raise at the InvIT level and pay the balance debt down across those SPVs. So entire, you can say, substantially, or maybe almost, more than 90-95% of the proceeds is going to be used towards the repayment of debt at the SPVs level.
Okay, absolutely. And Amit and Harshal, if we talk about the infra sector, the order inflow for companies remained tepid during the quarter gone by, and that is because of low awarding activity by the NHAI and higher competitive intensity in EPC projects. And of course, managements have also reduced their order inflow guidance for FY24 by 30 to 40% from their earlier number. So what is your outlook for FY25?
So see, FY24, basically, of course, we are already in, say, almost towards the fag end of Feb, and we have just maybe, the month of March. And anytime, people are expecting around 10th or 12th of March. We don't know. Maybe the model code of conduct will kick in, right? So maybe we won't see as much awarding as we used to see, or we have been seeing in the last 4-5 years. But yes, I think in FY24, even the, when the new government gets formed, maybe we can say that awarding, we can start seeing, say, maybe, July, August onwards. And that we see almost same level of awards, which has been there for the last 4-5 years. And we don't need to see much data. You can just see the budgetary allocation, which in the finance budget, right? This finance ministry has allocated towards moth, and that number itself is maybe almost same, and maybe just 2-3% higher rather than the last year. And that itself says that basically we can see the same rate of growth of award for the FY25 also.
Okay, absolutely got that. And coming to the budget only, because that the development of the infrastructure sector has been a priority area for the government, and the 2024 interim budget also focused on infra development. So, any announcement that stood out for you and would benefit the company's business going forward?
So absolutely, if you see, the allocation from this budget towards the Ministry of Road, MOTH, right? Ministry of Road Transport and Highways. That number itself connotes that there's a basically consistent and focused, basically, you can say, in terms of government's focus on this sector, because this once a road gets built, it doesn't just solve your connectivity problem, it also develops all the catchment area, right? So there's it has been seen that you see a decent uptick in terms of GDP from that area when the road gets built, because it's not only connects, it's also connects from an economic activities perspective as well. So we can see that the more roads get built, of course it gives a decent push up to your GDP. And I think this government in the last 10 years, we can see that has been a focus on at least infra and predominantly roads. We can see government's focus is being witnessed over the last 9.5, 10 years, and we continue to believe that that focus will remain, because the overall basically the government's guidance in terms of your GDP growth, becoming 10 trillion economy by the timelines which being talked about, road becomes a quite a one of the, I would say, precursor for that. Yeah.
Okay, absolutely. And let's talk about the financials as well, Amit and Harshal. The revenue from the 7 road projects that you mentioned amounted to 368 odd crore rupees. And in FY23, it was 1,510 odd crore rupees, if I'm not wrong. So what is the revenue guidance for FY24, for rest of the FY24 and FY25 as well?
Tanya, revenue from operations in this particular case might not be a correct picture to look at. The reason being, these are, hybrid annuity projects where it are considered as a financial asset under Ind AS, wherein, only the finance income is recognized in the profit and loss statement, and, certain portion of the annuity payments, which is received from NHI, is accounted in the balance sheet. So, the number you're looking at in FY23 of 1,510, the reason of that is that part of it is a construction income, since certain of the projects were under construction at that point of time. The same expense is recognized on the expense end as well. Whatever we are booking in the construction income, it doesn't contribute to the EBITDA, but it is an inflation which you can look at the revenue side. But if you look at cash flow from projections, last year we had received a total inflow of 861 crores from NHAI towards all the annuity payments across these 7 assets. For this particular year, till January, we have already received 830 odd crores. For the full year, it will be close to 1,045 odd crores. And next year, it will be close to 1,016 crores and around that range.
Okay, absolutely. And before we let you go, just a last question for all our investors who are watching you right now. I mean, why should one subscribe to your issue? What would be your message that you want to give to all the investors who are watching you right now?
See, look, I think this is a very pertinent question. Thanks for asking that. Basically, what happens is it's a different asset class where I don't want our InvIT being compared against pure play equity, because it's a different game. I think all of our investors must have been investing for equity market for the last so many decades, years, days, months, numbers. I don't know. But of course, everybody has seen the market volatility. If you see a data over the last maybe if you take a 15 years, I think the market has given you almost 14.5% kind of return.
Yes.
I'm not saying point to point, because you can play with the data and can show numbers whatever you want to show.
Yes.
But that's the number I think what I have. The guidance what we are giving in the market, and we have a think the decent traction what being looked at, the kind of guidance what we are given, we are not much far, and we are saying that basically that yield or IRR, whatever you talk about from a simplicity perspective, yield is what investors will give. IRR is something which I'm just discounting till maturity. So basically that rate, we are not far, and anybody who wants to see basically who wants to see a decent fixed kind of yield coming to their portfolio, which according to me should definitely become a decent part of their overall portfolio. So if suppose your portfolio is 100, you might look at maybe, X number, which can be 10, 20%, which definitely should be from a fixed income perspective. And when I'm saying fixed income, of course, your FDs, your, GSECs, those are, very at the level, and we are talking about maybe a 350, 400 bips higher than those, those levels from that number. So of course, from a yield perspective, from a consistent basis, we are giving not, a number, which is not much lesser than market return. And at the same time, a consistency basis, we are giving you as consistency as an FD or maybe a 10-year GSEC can give. So I think, from that perspective, you are getting a mix of both, a very decent, handsome return on a consistent basis, and management is basically, committed to give you that return over the next life of the InvIT. So I think, and just one more thing I would want to mention here, that we also have a ROFO, which is right of first offer with GR Infra. So we are not only talking about these 7 assets, let's say 23 more assets we are going to acquire GR. So, by that, and then next 5 years, whatever GR Infra will bid in terms of roads, those assets will also come to this InvIT. So we are trying to elongate this over the next, say, 2045, 47. Is actually, the basically matching with the Amrit Kal, which our Prime Minister is talking about. So I think if you look at a, yield perspective, any paper which can for the next 20, 22 years, we that bill, quite in a more decent way.
Absolutely. You said it, and I think you explained it really well. So on that wonderful note, thank you so much, Amit, and thank you, Harshil, for sharing all the valuable insights with us and being with us here on BT TV, and all the best to you for your
thank you so much.
coming IPO.
Thanks.
Thank you. So with that, ladies and gentlemen, it's a wrap, but stay tuned to BT TV for all other market updates.